Now it's time for Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. We are seeing North American equity markets higher across the board. The TSX up by about 0.8%, recovering from yesterday's declines, leading it to be on track for essentially unchanged on the week. WTI is under a little bit of pressure today, but it is or looks to be up by about 3% for the week, which would lead to 5 weeks of straight gains for the price of oil. Canadian dollar a little bit weaker versus the US dollar, and we are seeing gold up today following yesterday's 1% decline. This week, we did learn that the Canadian economy grew 0.3% in May, less than expected. So again, the week a little bit weaker than we thought. And interestingly as well, this is May data, and we're at the end of July. So there is definitely a real lag effect with respect to the Canadian economic data points. We also did learn from the BOC, the Bank of Canada's July 12th meeting. We got the summary of that meeting, and it looks as though they're going to just continue to be very data dependent in terms of whether or not they'll raise rates or hold off. In terms of corporate news here in Canada, TRP or TC Energy did announce that they're going to be splitting into two companies, the pipelines as well as the natural gas business. So two different businesses there. They will spin them out and they will both be publicly traded companies. We're also learning, according to the Globe and Mail, that there doesn't seem to be as much interest in purchasing Laurentian Bank. Apparently, TD and Scotia have bowed out. We're also here in Canada ramping up earnings season. A couple of energy companies to watch. Baytex Energy, the ticker there is BTE. That stock is up 6% following their most recent results. And you're also seeing Imperial Oil up by 5% following their most recent results. CP had a little bit of a mixed quarter, but the stock is up 1%. They did say that they believe they'll see a strong back half of the year. Current quarter was, however, impacted, as they say, by a dip in rail demand. We also saw some results from CNR this week as well, and it looks as though they had a bit of a disappointing quarter. RCI came out with mixed second quarter results this week, but pointed towards a strong back half of the year, so a higher fiscal year guidance. In terms of other news and items to watch, a couple of upgrades here that are kind of interesting. Celestica has been raised to an outperform over at TD with a $23 price target that's up from $14.50. That stock is up 14% today. We're also keeping our eyes on Tech Resources. That got an upgrade over at National Bank to an outperform, $70 price target there. In terms of the U.S. markets, higher across the board, as I mentioned, up by 1% to 2%. Some real strength. Why is this happening? The story appears to be disinflation. So in other words, inflation really easing off, leading investors to believe that the U.S. Federal Reserve will not need to continue to hike rates and to tighten the financial system. We did receive the PCE results. This is the core key inflation number that the Fed really likes to look at, and it came in at 4.1%. So again, we're continuing to see that deceleration, a key data point today, helping those markets move higher. We're also, of course, continuing to get results from U.S. earnings. It seems as though the results are a little bit better than expected. 50% of the S&P 500 has already reported, and the earnings beat is higher than the 5-year average. So again, perhaps better than feared earnings, helping the market move higher. We're also seeing the consumer resilient in the United States. Personal spending is up, better than the consensus was expecting. And then a couple of earnings just to point out. Mondelez within the beverage space came out with better than expected results. Same with SAM, Boston Beer. SAM is the ticker there. Better than expected results. And also Intel. They posted their most recent results and showed a pickup in PC demand. So taken together, I think better than feared, and also so many dollars have been moving into the money market fund. We're actually at a historic high of $5.49 trillion. So people really still parking their money in the money market funds. What does that mean? It probably means that the equity markets have more room to run. I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here. Remember, for more extended financial coverage, you can always tune in to The Buck Stops Here, which airs Sunday mornings at 9 a.m. Eastern only on the News Forum Network.